also have from the World Bank, Ms. Mona Haddad, who is the bank's Global Director for Trade, Investment, and Competitiveness. I'm super pleased that you have been able to join us today for the launch of the 18th edition of the Rwanda Economic Update. Published twice per year, the update analyzes recent economic developments and prospects and selected economic and policy issues of priority for Rwanda. The current edition of the update, if you couldn't tell from all of my introductions, focuses on regional integration and cross-border trade. This REU, or Rwanda Economic Update, is a collective endeavor. It draws on data from the government, data collected by the World Bank in its regular economic monitoring and policy dialogue. And it involves actually several members of staff from the various units of the World Bank, as well as an extremely strong and close collaboration with different government institutions. And of course, there are usually other stakeholders. So we have private sector associations, etc., who have also, lent their voice, lent their time for us to be able to develop this report. And we'd like to thank each and every one of them. The report will be reviewed in detail by my colleague, Calvin Dijofak, who is the World Bank's senior economist for Rwanda. He will make a presentation later in the program. But at this juncture, I would like to mention a few of the main findings and policy recommendations. At the bank, we are very happy to observe that the Rwandan economy achieved a very strong recovery in 2021, as solid global growth, robust fiscal stimulus, and a mass vaccination campaign supported a rise of GDP of 11.1% in the first three quarters of 2021. However, despite the recovery, it is indeed quite worrying that the level of unemployment continued to deteriorate and remains above the pre-COVID crisis levels. Sustained growth in trade will be a key driver for achieving the government's goal of becoming an upper middle income country by 2035, and essentially a pillar of the post-COVID recovery. Rwanda has steadily increased international trade over the past 2 decades. Its 17% growth per year from 2010 to 2019 was way above both global and African trends. Trade facilitation is one of the areas where regional integration and cooperation within the East Africa community has been the most consequential, contributing substantially to Rwanda's ability to access international markets. As a result, Rwandan trade costs declined drastically over the past decade. Rwanda ranks its ranking in the World Bank's Logistics Performance Index moved from 148 globally in 2007 to 62 in 2016. However, exports to regional partners have almost stagnated, and Rwanda remains a less open economy than the middle-income countries that this nation aspires to match. Challenges to the regional integration include a narrow export base and significant similarity of comparative advantage among its regional peers. The second would be high trade costs at the regional and the domestic levels. The third challenge, discriminatory non-tariff barriers. And finally, persistent border closures in recent times. This report emphasizes a few key recommendations going forward. First, the government may wish to consider reshaping its regional trade policy to foster industrialization and harness regional and continental opportunities. Two, given increasing trade opportunities with the Democratic Republic of Congo, one of Rwanda's neighbors, policies should focus on achieving the same level of integration with DRC and the rest of the economic community of the Central African states that Rwanda currently enjoys with the East African community. This could be achieved by aligning the two regions' tariff rates and improving coordination and harmonization of trade procedures. Our third recommendation relates to Rwanda continuing to pursue its leadership role in advancing the Africa Continental Free Trade Area agenda. We see the AFCFTA, its preferential market access, as a means to secure new opportunities for exports from Rwandan firms, essentially broadening the country's market. Fourth, Rwanda would need to implement a new generation of trade facilitation and logistic reforms to further reduce trade costs at the regional and domestic levels, including most notably achieving a regional agreement for multimodal transport. Two, enhancing the efficiency of trucking firms, which is a primary mode of transportation of goods in this area. And three, investing in facilities to handle shipping containers. Finally, the government may wish to consider expanding Rwanda's role as a logistics hub. And this would require continued investment in infrastructure and a certain number of policy changes that would focus on the following. One, reducing the costs of trade at Rwanda's border with the DRC. Two, upgrading the logistics services supporting land transport from the Democratic Republic of Congo. And three, pursuing an open skies arrangement with East Africa community and non-East Africa community countries to further expand Rwanda Air's network, providing an alternative mode of transportation of goods. I'd like to mention a little bit about what the World Bank is doing in Rwanda in support of the regional integration and trade agenda, because we believe that this will be key to essentially us helping to fulfill our mission of ending extreme poverty and promoting shared prosperity. We have an ongoing lending operation called the Great Lakes Trade Facilitation Project, which is aimed at facilitating cross-border trade by increasing the capacity for commerce and reducing the costs faced by traders, especially small-scale traders and women, specifically at the borders with DRC. There's also a transport project called the Lake Victoria Transport Project that is looking at improving roadways through borders in a particular part of the country. And this, of course, because so much of trade is via road, will be significant in supporting the trade and regional integration agenda. Lastly, we have ongoing analytical work, because as you know, the bank doesn't only lend money or give grants, but we do a lot of research and analytics to help guide and inform the government in its definition of policies. And here we have a piece called the Rwanda Trade Competitive Diagnostic, and it looks at trade in this post-COVID context. This activity aims at providing evidence-based analysis to enhance Rwanda's competitiveness and to aid in achieving its vision of becoming a middle-income country by 2035 by bolstering international trade. This study will analyze the effect on shared prosperity, that is, to boost the incomes of the bottom 40% of the population by strengthening cross-border trade, as well as prospects for an emerging new trade environment in the post-COVID-19 world. In fact, the section of the REU that focuses on trade is but a small piece of this broader analytical work, which will be disseminated later this year. In conclusion, I would very much look forward to what I hope will be a fruitful discussion of the challenges and solutions to accelerate regional integration and cross-border trade in order to improve Rwanda's resilience against global shocks, support post-COVID growth, and to help reduce poverty. We have assembled a very, very interesting group of panelists who will speak to us on these matters and who will answer your questions. But before that, I am very, very pleased to welcome Minister Beata to share with us her keynote address. Minister Beata is, of course, Minister of Trade and Industry, but she is a seasoned economist with over 15 years of experience in the financial sector and much exposure to development through her work with the Bill and Melinda Gates Foundation. Minister Beata, thank you so much for taking the time to join us, even though you're joining us from far away, and we look forward to hearing your keynote address.
Thank you. Thank you, dear Roland Price, Country Manager of World Bank. Distinguished panelists, we are going to listen in the few minutes to come. All attendants to this meeting, ladies and gentlemen, good evening, good afternoon. I think in Kigali it's at 3. So I will say good afternoon. On behalf of the government of Rwanda and on my own behalf, I wish to welcome you all to the launch of the 18th edition of the Rwanda Economic Update. On this occasion, the Economic Update report focuses on one of my most preferred topics, regional integration and cross-border trade. Indeed, this report could not have come at a more opportune time for Rwanda and for Africa's regional integration. During last week, on behalf of Rwanda, I joined other state parties at the 8th Council of Ministers meeting to fast-track the start of trading under the African Continental Free Trade Area Agreement in Accra. For those economies which have met the modalities to start meaningful trade, trade will begin swiftly. Rwanda has also commenced its legal and institutional processes to operationalize the Economic Community of Central Africa States, ECAS, preferential trade agreement, as the country manager was talking about. The ECAS region presents unique opportunities for expanded market access to Rwanda. We are geographically close and linked through accessible road and air transport. We are, for the few trade levels we have, net exporters. Improved terms of trade will therefore have a substantial and immediate impact on Rwanda's value chain development and export competitiveness. As I'm sure you are aware, Rwanda has this week also opened its border at Gatuna to the flow of goods and services, a move sure to stimulate cross-border trade with Uganda. Further, the East African Community member states are in the process of finalizing negotiations on the revised common external tariff, as it was well explained that still had areas to improve, to ensure that it's not a bias to value addition. And we are also in the process of admitting the Democratic Republic of Congo into the community. This will increase cross-border trade by eliminating tariff, reducing non-tariff barriers, as well as harmonizing standards. Those practical steps taken to expand regional cooperation and are in line with Rwanda's broader strategic vision of encouraging trade connectivity and positioning the country as a hub for commerce, transport, and investment. In this regard, the 18th Economic Update Report is very rich, providing insightful. It explores these interventions and provides recommendations to further build on the progress made. We can't thank you enough. We no longer talk about Rwanda as a landlocked country, but Rwanda as a land-linked country. It is then incumbent upon Rwanda to enable trade policy environment with requisite trade infrastructure, like one-stop border posts, cross-border markets, logistic hubs, warehousing facilities, and integrating system to simplify trading. We have seen the number of cross-border markets expand to 7 over the years, and facilities like the Kigali Logistic Platform increase the amount of containerizing cargo for import and export. But there's still a lot to do. And I thank the team from World Bank to have entered into details, explaining us, showing us the path. Warehousing infrastructure in Rubavu and Rusizi are still ongoing, targeting neighboring markets. It is increasing. It is a project to expand further in the coming years. We hope to see it stimulating the abundant opportunities and the conducive investment climate in the country. As I conclude, regional integration and cross-border trade is an avenue for growth and development. By trading closer to home, Rwanda's businesses will develop export experience and competitiveness, with a special key on e-commerce for the small traders, hoping to contribute sustainably to structural transformation. But finally, allow me to really deeply thank the World Bank Rwandan team, the World Bank experts who work on this report, the countless stakeholders who provided invaluable insight and contribution to realize this economic update report. I was delighted by reading page after page, every single paragraph of it. And I think it will be one of my books to walk around when I'm traveling as well. I will not be able, unfortunately, to attend the whole fruitful discussions to come until the end of the session, but I wish you have productive discussions. And as our team is already on the call, I thank you, looking for a closer collaboration. Thank you.
Thank you so much, Honorable Minister, for your enlightening remarks and, of course, for being able to connect to us while traveling. We've taken a lot of your time, yes, and we look forward to continue engaging when you get back home. At this point, I would like to invite you all to watch a brief video clip summarizing once again the findings of this and the recommendation of this report. Okay, it looks okay. It looks like we have some issues on putting it online. Okay, it's coming. Thank you. Thank you, Millian. Millian, the voice is not coming. No audio. Okay, I think let us move to the presentation and we'll come back to the video later. Calvin, okay, let us move to the presentation of the.
I can present, but you.
Yeah, then we can come back later.
Share. Yes.
Okay, Calvin.
Then can you allow me to share my presentation, please? Can Emilian hear us? I'm still not able to share, so.
Thank you.
Emilian, can you hear us?
Yes, yes.
Okay, please. You have to allow me to share. Thank you, Emilian. It works now. Thank you very much, honorable ministers. Thank you to all of you joining us this afternoon for this launch of a Team Rwanda economic update on regional integration and cross-border trade. Before I start the presentation, please just allow me to recognize some of the many contributions that we received. First, from the World Bank team, I'm not going to call every single member, but just would like to acknowledge Peace, who has been co-leading this effort with me, but also Israel and Charles Koneka, Dominic Jinke from the World Bank Trade Department, for supporting us on the bigger piece of trade report that's going to be disseminated later this year. As the country manager told you, the special issue of this Rwanda economic update is extracted from that bigger trade report. Also want to recognize, in fact, our collaboration with the International Growth Center on this work pathway for actually. Our presentation is going to be structured around 4 main points. The first one, very briefly, we'll talk a little bit about the recent economic developments, then discuss a little bit the Rwanda trade performance and the impact of COVID. The third point would be about the main challenges to regional integration. I will close the presentation with a few priority areas for reform in order to strengthen regional integration. Before that, let me say a few words about the main messages emerging from this report. The first one will be that the Rwanda total export have increased significantly over the past 2 decades, driven notably by a drastic reduction in trade costs in both the central and northern corridors. The second is that export to regional partners increase. However, the pace was slower compared to the growth with the trade to the international market. I also have to underline that Rwanda remains relatively less open country compared to other countries, the same level of development, the country, the same size of the population. The third message here is that the impact of COVID has been relatively drastic on trade, and that trade in service and regional trade were the segments that were the most affected by the COVID in Rwanda. Looking ahead, Rwanda should reshape its regional trade policy to foster industrialization and optimize the benefit from emerging trade opportunities at the regional and continental level. Finally, the implementation of new generation of trade facilitation reforms, including a regional logistic hub, will further reduce trade costs in Rwanda. Let's move to the first part of our presentation, which is about the recent economic development. Very quickly, the main message here is that Rwanda has achieved a very strong economic recovery in 2021. The government estimate now is that the growth for 2021 is going to be about 10%, and that's in 2021, the GDP, in fact, recover its level of the pre-crisis level, its level of 2019. All this thanks to very robust stimulus that the government put in place, thanks to very accommodative monetary policy with relatively low interest rate, but also thanks to solid global recovery and the massive vaccination campaign that's been very successful in Rwanda, together with the very targeted lockdown that the government has been implementing. As also stressed by the country manager, we are seeing, however, that despite this recovery, the labor market is still relatively depressed. the level of unemployment, for example, is still around 13% higher than where we were before the crisis. And this is why, what this, because this seems contradictory, right? You are having this strong recovery and then not much, in fact, in terms of employment. When we go through the data, what is emerging is that most of the employment creation happened in manufacturing and construction. And basically, the growth has been driven by this relatively high productivity sector. As a result, in the rural area, and for the female, because most of them are employed in rural and in agriculture, the level of unemployment remain higher, even if we are having a lot of job creation in manufacturing and construction. Let's move to the second part of our presentation to discuss a little bit Rwanda trade performance. I think the starting point here, in fact, should be to discuss a little bit. Okay, someone just took my presentation out. Can you give me the possibility to share again, Emilian?
Yes, yes.
Sorry for that. Okay. So the starting point to assess the performance, just for us to ask ourselves, where does Rwanda stand today in terms of trade openness? The graph that we have here is giving us the export of goods and services of many countries as a ratio of their GDP. This for the country with the population size below 20 million. We can see Rwanda, that little red dot is below the curve, so it's below the average, basically telling us that the 20%, okay, the 20% of export, 20% of GDP of export of Rwanda is below his comparators. And one other way, in fact, to assess this level of openness is to look at it through the lens of the government goal, in fact, of becoming an upper middle income country by 2035. So for that, the government, the country will need, in fact, to increase its trade openness from the 20% that we are observing now to basically 46%. Now, another way to assess this performance, not just to see where we are now, but to see what's the direction, what's actually the path. And if we look through that lens, the Rwanda is actually doing very, very well. In fact, this graph that we have here is giving us the growth rate of Rwanda trade for goods and services between 2011 and 2019. So we have that growth for Rwanda, forward, and sub-Saharan Africa. And we can see that Rwanda has been outperforming both the world and sub-Saharan Africa with, on average, 14% annual growth for his total trade of goods in services. Another way to assess the performance is to see how Rwanda is doing with his neighbor. So the picture here is a mixed one. First, when Rwanda joined the EAC in 2019, the trade with the region, with EAC community exploded. However, between 2010 and 2019, that trade did not decline. However, it has been rather stable. So therefore, we can see here that the share of total Rwanda export to the EAC country declined substantially from 23% in 2010 to just 12% in 2019. So the other side of this picture that we can also look at is the trade with the big neighbor, the Democratic Republic of Congo. We can see that trade, however, increased substantially. The share of trade of Rwanda trade with that country rising from 8% in 2010 to 32% in 2019. We will discuss a little bit later what are some of the drivers behind this pattern. To conclude on the trade performance, just to say a few words on the impact of the pandemic. Rwanda, like many other countries around the world, suffered severely from the pandemic effect. The total export of goods and services declined by more than 14% in 2020. This decline was mainly driven by decline in trade in services, with the tourism following with also the export of transportation declining substantially. This due to the border closure and the trade restriction, as we all know. When we try to assess this impact of COVID in terms of a destination, we can also see that the regional export suffer more than the export to international destination. Formal trade with EAC, for example, declined by more than 51% in 2020. Cross-border informal trade declined even more by 67% in 2020. Let us move to the third part of the presentation, which is about the challenge to regional integration. I would even say about the main drivers to the regional integration in Rwanda. Here we explore around four main areas of challenges of drivers. First, trade policy, mainly tariffs. Second, non-tariff barriers, still trade policy, but mostly tariff barriers. Third, trade facilitations. And finally, supply side constraint. So in terms of trade policy, what we really have to underscore here is that Rwanda has been a true leader in terms of trade reforms. Since 2000, the government has adopted a wide range of reforms to stimulate export growth, including improving substantially the investment climate in the country, joining different preferential free trade agreements, the EAC, the COMESA, the ECAS, African Free Trade Area Agreement, and establishing an integrated set of strategies to address both general and specific sector challenges. However, despite this outstanding effort, there's still opportunity for improvement. And this relatively, basically around the East Africa community common external tariffs. The first area of improvement is about the deviations from the EAC common tariff schedule. That has been very disruptive. The selective increase of tariff above the common external tariff level by some partner states to protect national industry will really limit the attractiveness of the EAC, where the CAT, the common external tariff, is becoming now less and less common. So there's one statistic here that's showing us that in 2020, about 7% of total imports that enter this custom union enter under more than one tariff rate. This just gives us to what extent we have these deviations happening. The second area of improvement, in fact, could be about this exception list that exists, and which actually is something that is allowed by the EAC, common external tariff. It's basically, in fact, the possibility for a country member to have a list of so-called sensitive items on which they can apply a tariff ranging from 30 to 100%. In terms of comparison, the normal, if we just considering, in fact, the normal tariff level, the EAC would allow the maximum of 25%. Okay? So the issue here for Rwanda is that most of these products on the exception on the sensitive list has been products that are used by Rwandan firms as an input. So this is contributing to this basically hampering the productivity, the competitiveness of a Rwandan firm. The other area of trade policy that we explored was the non-tariff barriers and standard. And here, once again, Rwanda has made substantial progress reducing non-tariff barrier and putting in place infrastructure to report non-tariff barriers. However, there are still some area, some margin for improvement. Those that we can mention here is that, for example, we still have technical regulations, in fact, that are hampering the intra-EAC trade, non-harmonized sanitary and phytosanitary requirements, and complex rule of origin requirements. Just one important statistic is that the EAC has adopted more than 1,500 product standards with a plan to adopt 5,000 more. So this can be particularly bothersome for exporters. The other area of challenges for trade is about the trade facilitation. I have to say this is really one area, as stressed by the country manager, this is really one area where the regional cooperation allowed Rwanda to make substantial progress. Rwanda has been truly a leader in reducing trade costs in recent years. We can assess that through three main metrics here. If we take the World Bank Logistic Performance Index, for example, the first graph that you have here at the bottom, that we have here at the top, is giving us the score of Rwanda between 2007 and 2016. You can see that that score moved from 1.8 to 2.9. But to really understand, in fact, the meaning of that, we have to see how the ranking of Rwanda changed from 148 globally in 2007 to 62 in 2016. This is the most impressive and the most important progress that we can observe in any African country. So the other metric through which we can assess this progress in terms of trade facilitation is the cost of transporting containers. And if we look at the transport of containers from Dar es Salaam to Kigali, the price, in fact, per kilometer declined from 2.8 in 2013 to 8.8 to $1.87 in 2020. So this is a major decline. The third metric that we assess here is the time and the reliability of supply chain. And here again, we can see that thanks to regional collaboration, the reforms contributed to drastically reduce clearance time and improve the reliability and predictability of supply chains. Some of the major reforms that were very helpful here were, for example, the introduction of one-stop border post, which allowed the country to start the clearance before goods arrive, moving final clearance of goods away from the border to points of destination. And also the use of electronic cargo tracking system to keep track of goods and trucks in transit across international boundaries. However, here too, there are still opportunities to make some improvement. And the key reason for that here is that some of the progress that we describe here in terms of trade facilitation benefited the most overseas trade, because the focus of the reform has been mainly, in fact, on the processing and clearance of goods coming through the seaport of Dar es Salaam and Mombasa. The result, in fact, is reflected on this graph that we have here. If we consider the first graph, the one on the top, that's giving us the evolution of the trade cost between 2000 and 2019. We can see that on almost all destinations, Rwanda has been enjoying a decline of trade costs, but from 2010 and 2019, nothing happened. In fact, those curves are basically flat. The curves of cost of trade between Rwanda and its neighbor. And more worrisome is the cost of trade between Rwanda and Kenya, which the bigger partner in the region. That cost actually increased a little bit, but also the cost of trade with the DRC, which is the emerging major trade partner for Rwanda. That cost did not change, in fact, during the last 10 years. So these are the areas where effort should be made. The other aspect where more effort could be made will be just before border costs. So these are the so-called the internal trade costs. Because of relatively difficult terrain and the infrastructure gap, those internal costs are still relatively high in Rwanda. The second graph that you have here, the one on the bottom, is making the comparison between Rwanda and some of the key countries, US, Nigeria, but also Ethiopia, a country that is landlocked like Rwanda. And we can see that the trade costs, the before border trade costs in Rwanda is 10 times higher compared to US, 3 times higher compared to Ethiopia, and 2 times higher compared to Nigeria. The other considerations in terms of drivers of regional trade is about security. This become in recent years a major factor for Rwanda and the EAC. So this graph that we have here at the top just shows us the number of months for which the border has been closed between Rwanda, Burundi, and Rwanda and Uganda. And this actually because of the security concerns. what the study, in fact, is showing this particular Rwanda economic update, but also the bigger trade report that will be coming later, is that this border closure has negative impact through on trade through multiple channels. The graph that we have here is the evolution of the formal trade between Rwanda and his neighbor. We can see that in 2020, from 2019, the trade between Rwanda and Uganda, trade between Rwanda and Burundi, all but completely disappear. It's true that for that formal trade, we are also seeing some trade diversion effect because the same period, same moment we are seeing increase of trade with Tanzania. I have to say that for the informal trade, such possibility of trade diversion would be relatively limited. The other impact of a border closure in the context of Rwanda would be the uncertainty that this creates for the prospect of Rwanda as a regional logistic hub. The last consideration that we explore here in terms of trade challenge is the supply side constraint. So Rwanda capacity to export to his neighbors has been limited also because the good that Rwanda has to propose for export are very similar to the good that his neighbor are also exporting. So we have this graph here, the graph on the bottom, which is about the trade complementarity index. Just showing us to what extent what Rwanda has to export match what the other country has to import. And that indicator is relatively low. We are seeing that with ESC on average, the complementarity index is around 30. Okay, it's around 30. This is relatively low. The literature, when the complementarity index is around 40 and more, is where it's relatively good. So one reason for that similarity is that the supply side, the country hasn't had the capacity to diversify and upgrade the type of good that Rwanda is producing. And that's reflected on the graph that we have on the top, which is giving us an idea of the diversification of trade in Rwanda. So we have here a diversification index in 2019, which is around 0.21. The maximum here, in fact, should be 1. So it's very relatively low, the extent to which Rwanda has been able to diversify its trade. Let's just move to the last part of the presentation, which about a recommendation. What are some of the key recommendations to foster regional integration? So we are making a recommendation here around 4 main areas. First one, trade policy to foster industrialization and optimize the benefit from emerging trade opportunity. The second, leveraging African Free Trade Agreement to create new opportunity for export. Third, implementation of new generation of trade facilitation reforms to reduce costs. And fourth, implementation of an efficient regional logistic hub. If we consider the first area, the trade policy to foster industrialization, the priority here should be what the government is doing already. The Honorable Minister told us is to really to continue to renegotiate the ESA tariff schedule band to make sure that we are reducing those list of exceptions to make sure that the tariffs can go down and that Rwanda firm can have access to intermediate consumption at relatively cheaper, relatively low price. It would also be essential to improve the product classification across tariff schedule band to make sure that the import, the intermediate consumption are being applied relatively low tariffs. The other area of improvement will be the reporting of non-tariff barriers. Once again, Rwanda has made a lot of progress here and is actually one of the champions on this in Africa. However, some of the things that could be done here to improve will be increasing the number of sites for in-person reporting so that so the operator, they don't just have to, when they are reporting in person, they don't just have to go to Kigali, to the ministry. If there are other areas to report outside Kigali, that could be even more useful. The last area of recommendation here regarding trade policy be what has been stressed by Ronan, but also confirmed by Honorable Minister as to what they are trying to achieve, is that giving the increasing trade with DRC, that the country should try to achieve the same level of integration with the ECAS as that with the ESC in order to really leverage this trade opportunity with the DRC, but also with other ECAS countries. So this should be done through aligning the two regions' tariff rate and improving coordination and harmonization of trade procedures. We know that this is work that is being done this moment. The second area of reforms leveraging Africa Free Trade Agreement to secure new opportunity for Rwandan firms. Here, just to really stress once again that Rwanda should really continue the very strong leadership role that the country has been playing in advancing the African Free Trade Agreement agenda. Rwanda should remain as proactive as they are now, in fact, identifying export and supply opportunity offered to Rwanda firms and consumers by the African Free Trade preferential access into African countries. The third area of recommendations is implementing new generation of trade facilitation reforms. So key improvements that could significantly reduce both external and internal trade costs include improving the efficiency of truck firms. This could improve the trucking service, reduce costs, but also allow firms to offer more sophisticated services. The second recommendation here is that achieving a regional agreement on legal framework for multimodal transport could reduce transport costs significantly. Also, building a railway line. So this is one of the government project, building a railway line along the central and northern trade corridors. A railway connecting, for example, Rwanda to the dry port in Hisaka will more than half the transit time from Kigali to Dar es Salaam. However, the fiscal implication of railway investment will have to be carefully assessed, as examples of Ethiopia and Kenya show us that financing such investment purely through increasing traffic can be challenging. The last area of recommendation is about implementing an efficient regional logistic hub. Let us start here by really underscoring the potential of logistic hub for Rwanda. So the potential market for Rwanda provision of logistics service is really substantial. In the short term, the most important market for this purpose of building logistic hub is Eastern DRC, and the volume of trade that we have been able, in fact, to measure there is 1.1 million tons. In comparison, what is considered as the most successful hub in Africa, if we take South Africa, okay, if we don't consider South Africa, which is very rich, very diversified economy, okay, one of what is considered as a very successful hub in Africa will be the DRC, Copper Belt, and Zambia, where the volume of trade, in fact, is around 0.6 million. Rwanda also, besides having this market, has also made a lot of effort in terms of developing policy framework, developing critical infrastructure that could really help the country, in fact, to play that role of logistic hub. Main areas of action to capture even more market shares for transit would include addressing the high trade costs at Rwanda's border with DRC, upgrading the logistic services supporting land transport from DRC. So this will mean developing temporary storage services, repackaging services, and other value-added services. And finally, continuing the EAC's open sky arrangement to further expand Rwanda network by reducing restriction on competition. The end of our presentation, but I would not end by really acknowledging and thanking Minicom for absolutely outstanding collaboration that we received for this work, not just through the information sharing, not just through their availability, but by also contributing very substantially to the substance, to the analysis of this report. I would like to thank DJ Tony for leading that effort from the Minicom side. Maura Koze, thank you. The presentation obviously will be shared with you, and a link will also be made available so you can have access to the full report. Thank you. Just over to you.
Urakoze cyane, Calvin. Thank you so much for the very clear and very well detailed presentation. Now, I invite you to now watch the short video summarizing the key findings of and the recommendation of the report. Miriam, we are ready. Miriam, can you hear me?
Yes, yes.
Yeah, it's coming. Thank you, Miriam. With that, it's now my pleasure to introduce to you the moderator for our panel discussion today, Paul Blanton. Paul is a trade and regional integration lead economist in Africa region of the World Bank. Previously, he worked in the trade department of the bank, where he worked on for several years on issues related to trade in and regional integration and the preferential trade agreement. Over to you, Paul.
Thank you, Rogers. And just checking that you can hear me okay.
Yeah, we can hear you clear, Paul.
Great. Thank you very much. And good morning, good afternoon to everybody who's connected. It's a real privilege for me to be able to moderate this this discussion of trade and regional integration in Rwanda. Rwanda was one of the first countries that I worked on when I joined the bank almost 20 years ago. And I've been lucky enough to work on a range of projects in Rwanda. Most recently, I was part of the team that designed and implemented the Great Lakes Trade Facilitation Project that Roland mentioned earlier, that seeks to facilitate and ease trade between Rwanda and the DRC, particularly for small-scale traders. It's also a great privilege for me to be able to introduce what is an excellent panel of contributors who are here to discuss the main issues that have come out of the report that Calvin presented so nicely. We have Amina Rakunda, who is Chief Economist at Rwanda's Ministry of Finance, She's also a board member or board director of the Rwanda Stock Exchange and board director of the National Institute of Statistics. Amina is a very experienced economist, but also a seasoned negotiator on regional integration matters, where she's been serving as the deputy chief negotiator for Rwanda's high-level task force on the EAC monetary union and is involved in negotiations on fiscal policies. Antoine Kajanwe is the Director General of Trade and Industrial Policy with the Ministry of Trade and Industry, MINICOM. He oversees the ministry's domestic and international trade and investment related matters, intellectual property rights, consumer protection, competition laws and policies. Antoine is the ministry's chief trade negotiator and senior trade official. To get a private sector perspective, we have Dennis Carrera. He's a seasoned businessman in Kigali, chairman of GC Investments. He's shareholder and managing director of Kigali Heights Development Company. Intriguingly, he's professionally a criminologist, so we better be on our best behavior. But he's a former chairman and current vice chair of the East Africa Business Council and honorary council of Ghana in Rwanda. And Mona Haddad is the global director for trade, investment, competitiveness in the Equitable Growth, Finance and Institutions Practice Group of the World Bank. Mona is extremely experienced on trade and regional integration matters, having held various positions in both the IBRD and the IFC, the private sector arm of the bank, and her most recent assignment being Director for Country Economics and Engagement Department at the IFC, where she led the development of the joint World Bank country private sector diagnostics. Mona's had a variety of roles in various parts of the bank and various regions, including in East Asia as well as Africa. So we have a great panel. We're here to discuss some of the key issues that came out of the report. If you have comments, questions, please provide them in the chat, and we'll do our best to put those to the panelists as we proceed. Let me start. I think there's two issues that we really want to focus on. First is on the impact of COVID and how Rwanda is recovering from COVID and the lessons it can learn from the pandemic. And then secondly, drilling down on the issues that were raised by Calvin with regard to regional integration and how to best maximize the opportunities for Rwanda from regional integration. So maybe starting with the impact of COVID, and maybe the first question is to Mona. Calvin highlighted how the pandemic has devastated Rwandan trade, as it has for other countries. And Rwanda remains vulnerable to international trade shocks, including from the emergence of further COVID-19 variants that threaten supply chains and global recovery. And so what can Rwanda learn from other countries facing similar circumstances in how to improve its resilience to future shocks? Mona, over to you.
Thank you very much, Paul. I hope you can see me. I was told that I'm having video problems.
We can see you. I can see you.
Okay, very good. Thank you so much. So let me start by thanking you, Paul, and mentioning that Paul is not only a top trade expert at the World Bank, but a top trade expert on Africa at the World Bank. And we're very, very happy to have him moderate this session. I also want to say that I visited Rwanda a couple of years ago to attend the Africa CEO Forum and was really struck by the determination and the vision of the leaders of Rwanda and the people of Rwanda to grow and modernize as an economy. I'm sure this will serve as an inspiration to many African countries. So on your question, Paul, let me begin by saying that I'm very happy to be part of the launch of the 18th edition of the Rwandan Economic Update. This is a timely report coming as it does at the start of the third year of COVID. The continuing global recovery has been stymied by multiple challenges: the rapid spread of the Omicron variant, renewed mobility restrictions, and increased labor shortages. In addition, the supply disruptions have contributed to higher inflation. According to the World Bank's latest Global Economic Prospects report, global growth is expected to decelerate markedly from 5.5% in 2021 to 4.1% in 2022, and further to 3.2% in 2023. The bigger worry is that developing countries are falling further behind. For emerging and developing economies, growth is expected to drop even more sharply. The COVID crisis has already pushed nearly 100 million people into extreme poverty, with several hundred million more becoming poor, and many of them in middle-income economies. The outlook for international trade remains cautiously optimistic. In the month immediately after the crisis in 2020, the volume of goods and services traded contracted by about 8%. Today, we're back to pre-pandemic levels, with global exports and imports for August 2021, each at around 18% higher than those recorded in August 2018. Interestingly, what we're seeing is that the quantities are weakening, but the prices are rising. Recovery in sub-Saharan Africa continues to lag behind advanced economies and emerging markets. The COVID pandemic pushed the region into its deepest recession since the 1960s. In 2020, exports and imports of goods and non-factor services declined by 12% and 11% respectively, while GDP shrunk by about 2%. These numbers improved last year. However, recovery remains tenuous, with persistent threats from a combination of new COVID variants and low vaccination rates. Supply chain bottlenecks, rising inflation, and elevated financial vulnerabilities pose major risks to the region. Global value chains have proved more resilient to the pandemic than many feared. Although GVCs can, under some conditions, spread shocks, especially those that are highly concentrated, such as microchips, they have proven to also be a source of resilience to economic shocks. The evidence so far is that countries more integrated in GVCs, particularly in advanced manufacturing and services, did better in terms of maintaining trade than countries less integrated, and particularly those highly dependent on commodities. Economies with diversified trade structures that are highly integrated in GVCs and less dependent on services that require face-to-face interaction, such as tourism and travel, have recovered faster from the pandemic. The crisis has therefore shown that there are mechanisms by which GVCs can maintain trade relationships during a shock, enhancing resilience and paving the way for strong recovery. So what lessons does the COVID economic recovery hold for developing countries? First, broadly, countries more integrated into GVCs did better than less integrated ones. Participation in GVCs may increase vulnerability to foreign shocks, but by tapping into global value chains or global supply chains, firms can also minimize their exposure to domestic shocks. Sourcing from abroad is an example of beneficial diversification when domestic production is disrupted. The World Bank's COVID-19 Business Pulse survey, conducted in over 60 countries, corroborates this finding. Firms engaged in global supply chains experienced only a slight decline in sales compared to non-exporting firms. Second, a riskier environment for trade puts more emphasis on export diversification, especially for low-income countries. Diversification is not just about more products, but really moving from lower to higher productivity activities like manufacturing, and within manufacturing and even services to higher value-added manufacturing and services and higher value agriculture. Rwanda's economy has posted a strong recovery, with GDP expected to grow from around 10% in 2021, compared with a contraction of 3.4% in the pandemic year. Before the pandemic, Rwanda's economy was rapidly growing, and its GDP averaged 7.5% yearly growth between 2010 and 2019, higher than East Africa's average of 5.5% and Sub-Saharan Africa's average of about 2% over this period. Estimates for 2021 indicate that exports and imports have improved to 14 and 12% respectively, from 9 and 3% in 2020. Just to conclude on this question, Paul, I will say that Rwanda is doing many things right. Rwanda is building back better, aiming for green, resilient, inclusive development. And here I want to point out the resilient part that would need some rethinking, as Rwanda and the whole world is likely to be subject to more shocks moving forward. Also, we need to remember that it is the private sector that does the trade. So ensuring a business environment that facilitates the operations of the private sector and ensure a level playing field among firms and sectors to help the competitiveness of firms will be very important. Rwanda is doing a lot on digitalization, and leveraging the digital economy for e-commerce will also allow Rwanda, as a small economy, to take better advantage of trade opportunities in the region. Finally, despite major improvements, as we have seen and heard from others today, trade costs remain high in some areas. And for example, the cost of transporting a container between Dar es Salaam and DRC has hardly declined over the last decade, while internal costs have increased owing to the country's infrastructure gap. So lots of lessons and lots of improvements for that experience already for Rwanda. So let me stop here, Paul. Thank you.
Thank you very much, Mona. Thanks for that very, very comprehensive answer, highlighting both not only the challenges that come from integration into the global economy, but the benefits in terms of resilience in times of shocks. If I may move on now to Amina, and a question regarding informal or small-scale cross-border trade, which is a particular feature of Rwanda's trade with its neighboring countries, but and a very important part of trade, but trade that was particularly hit hard by the COVID crisis and the border closures. And the report shows that informal cross-border trade declined by 65% versus 14% for formal trade. So what do you think could be done to improve the resilience of those most vulnerable who depend on small-scale cross-border trade for their living? Thank you.
Yeah, thank you, Paul, and thanks to the World Bank for organizing twice a year this gathering to discuss pertinent questions to the economy, and most particularly in this era of COVID-19, how countries, in this case is Rwanda, is doing with regard to recovery, but also the government response overall to COVID-19. So yes, by implementing COVID-19 measures, we actually had measures like closing borders, reducing mobility, that affected small cross-border traders. As you said, we had their business impacted by a reduction of more than 60%. So they were most hit compared to formal trade that we do with other neighboring countries. So it was actually in the concept of trying to contain the spread of the virus, but we came up with a response to support their business to keep going. What we did is to organize them into cooperatives, which was already a policy that we had in place before. But this time it was like a must for us to be able to facilitate. So they were clustered into cooperatives, and their goods were consolidated and will cross borders into trucks. And with that measure and system in place, they were able to, to continue, exporting and earn an income. It was actually a really hard impact because cross-border, small-scale cross-border traders, most of them are women. And we were actually, it was what we've been trying to achieve in terms of women economic empowerment, but also in general in terms of poverty alleviation that was strengthening by the COVID measures at borders. So today, this is the way we are taking is to have them into cooperatives, and good will be consolidated and will cross borders. With now the high rate of those traders into cooperatives, it's also making it easier for us to have well-targeted support in terms of training, in terms of financial support. We are working with BDF through the Economic Recovery Fund to make sure that they are benefiting from the lower interest rate in terms of loan with 8%. Those most affected are also, they are also covered under the social protection framework that we've tried to scale up because of COVID-19 situation. But of course, there are more to do in terms of the payment. How can we make the payment on the other side working with the payment on the Rwandan side? Interoperability of mobile payment, for example, is becoming even more important. We are trying to secure for them markets, the other side, through legal contract between the buyers and sellers. E-commerce infrastructure is a must post COVID-19. We are not. We are trying to do it globally across the board, not only for small cross-border traders, but for all people, trying to export outside the country. We are going to use smartphone. Cross-border traders are going to be supported in terms of smartphones for them, so that they can be able to check market information, but also contract information that they can use for negotiation between the buyers and seller. But also the bonded warehouse, which is part of the logistic infrastructure that we are investing in, will also help them in terms of the perishable goods that we most export, for example, to DRC. How we can keep their good when they are not able to sell, but also during the consolidation before it crossed the border. Thank you.
Great. Thank you very much. And that really highlights, I think, the importance of small-scale cross-border trade to the government, and also reasons why it should be promoted and facilitated. I think these small-scale traders, as you say, most of them are women, really should be seen as small entrepreneurs. They want to grow their business, and I think some of the solutions that you mentioned there with regard to e-commerce, mobile payments, are going to be really important in allowing them to do so. Thanks very much. So let's move on a bit now to the challenges that Rwanda faces in expanding its trade more broadly in the region. And to Antoine, the report shows that Rwanda faces the challenge of how to improve its sort of narrow base of exports, and the similarity of the products that it exports to other among EEAC countries. So what do you think would be the key elements of a strategy that would help Rwanda diversify and upgrade its export base to improve its ability to participate in regional value chains? Thank you.
Thank you very much, Paul, for that question. And let me start by thanking the World Bank team for the invitation and, of course, for the close collaboration in working together on this economic update report. Indeed, this was one of the interesting findings from the report, really, in highlighting the challenges that we faced in our regional trade with other EAC member states, that of the narrow base for exports, but also the competitiveness amongst member states. It's very much true. If you look at Rwanda's traditional exports, coffee, tea, minerals, it's very similar to what other countries in the region are also exporting. So you find this competitiveness that is oftentimes overshadows Rwanda's smaller volume and value trade. In some instances, you also have aggregation or agglomeration of Rwanda's exports in regional markets. For instance, tea. Rwanda's tea is exported and sold through the Kenya auction. So you tend to find that even when we do classify our exports, they're classified more for EAC or more as Kenyan exports than Rwandan. Even within non-traditional exports, such as horticulture products or agro-processed products or construction, this is also the same sectors where EAC countries are competing. Whether we're talking about maize, cooking flour, agro-processed rice, milk, juices, horticulture, vegetables, fruits, flowers, we're as a community producing similarly styled and type products. So we do tend to see that competitiveness on the export market. This is particularly impactful, negatively impactful for Rwanda, given our export experience or the level of our firms' experience to export, in that they're relatively new players, they have fewer export experiences, they don't have as dedicated supply chains as other regional competitors, they have lower economies of scale, and generally higher cost of production, whether we're talking about some of the inland costs that are highlighted in the report, or also electricity and other internal production costs. So all of these, I think, have led to this competitiveness that has narrowed our export base, but also ensured that it's being outcompeted by regional partners. So then raises the question that you've put to me of where do we diversify and upgrade our export base? And I think Ms. Mona touched on this, but it's really ensuring that we can transition to higher value product, higher value manufactured products. And in Rwanda, we like to term these made in Rwanda products. So how do we progressively over the medium to long term start to produce higher value products that are, of course, benefiting from regional value chains, but also integrating into global value chains. And so here I can mention a few: textile products, pharmaceuticals, medical devices, mobile phones, electric vehicles, electronics, really the products that require specialization in skills, capital intensive investment, and where Rwanda excels in terms of attracting efficiency-seeking FDI. And we've started to see investments in these very high-value manufactured products. Another sector where we need to diversify, and we've started to make some progress, is in value addition of minerals, mineral beneficiation. We've started to see this with gold, with a new gold refinery here in Kigali. We're seeing it with tin, with cobalt, and progressively more and more minerals. Rwanda is centrally located in that it's able to attract imports of minerals from across the region, add value to them, and export higher valued minerals, or else develop products and semi-finished products from those minerals. A final sector would be specialized services, ICT, finance, sectors that Rwanda has put a lot of infrastructure development, but also educational investments over the years. And of course, without forgetting distribution and logistics, the report spends quite a large section delving into this sector, and it's one that, of course, offers Rwanda a competitive advantage. It was striking to see that aside from the Zambia-DRC Copper Belt, DRC-Rwanda border offers the next largest potential market for cross-border trade in sub-Saharan Africa. So this, I think, is a huge opportunity for diversification and for upgrading our exports moving forward. And finally, where Rwanda does best and where we must continue to place emphasis is on standards, quality standards for our Made in Rwanda products, for our service delivery, because this is truly what sets us apart. And we can ensure that we can continue to not only access markets, but also capture and retain those markets that have been achieved. Thank you.
Thank you very much. You've highlighted, I think, a range of areas where there are opportunities for Rwanda to, as you say, move up the value chain and in improving its exports. And there's examples from elsewhere in the world where that has been a successful strategy. But maybe we can perhaps turn to the sort of private sector view and to Dennis and to get his perspective on what the private sector needs to be able to exploit the sort of opportunities that Antoine highlighted there. Dennis, over to you.
Thank you, Paul, and thank you, the entire team on the panel for this interesting and important discussion. I like the views presented, honestly, by the former speakers. They all speak to the key and important issues that quite inform Rwanda's path towards getting out of the COVID hit that we all experienced, and we know what it has had, the impact it has had on us. Now, from the EAC perspective, a couple of things should be done, and we as East African Business Council have done our part and continue to do it. As a matter of fact, even today, as I speak, we are engaging youth forums in a different city in the region. The last 2 weeks, you ought to have seen our activity, our involvement at the border of Uganda and Kenya. So our role as the East African Business Council is advocacy, and we do this as much as we can. And particularly during this COVID and post-COVID period, we tried our best to make sure that we speak as much as we can, because serious challenges came up during the COVID time. Clearly, looking at our borders during the COVID pandemic, you would easily tell that first of all, it got us unprepared, but not only unprepared to deal with the pandemic as it was, but even to harmonize our systems. We had long convoys of and paralysis at borders of trucks waiting for days and days before two countries harmonized processes. We had convoys between Rwanda and Tanzania. You remember the scenarios at Rusumo border, the scenario at Busia border with Kenya, Uganda, Kenya. There was a situation that was beyond control, and one would wonder whether do we ever have planning sessions or planning mechanisms that would sort us out of a problem in case of another pandemic came up or something else? Do we have these sessions? Clearly, what we saw in the last, in 2021, 2020, was that we were unprepared, and we seemed to be unprepared to talk, because talking even to clear tracks simply showed that it needed third parties, it needed further talks, it needed postponement, it needed demonstrations. We are all aware of the fact that at one point drivers demonstrated against the required operating procedures aimed at protecting them and other people. So what's the point of transporting goods, but the consumers are at risk? So there was a whole contradiction, and we didn't seem to be ready to listen to each other, customs officials and Ministry of Health officials. We clearly did not speak the same language. And so East African Business Council did its best to try and coordinate these efforts. And to an extent, we were listened to. To another extent, we need to keep talking because the listening seems to be a lot harder than presentation of the problems. Now, at the ESC level, I think there's need to operationalize the dispute resolution mechanism. We definitely need to resolve conflicts that come up across borders as much as possible. Currently, we are aware that our dispute mechanism, resolution mechanism is so weak. An issue presented by one country or a problem presented by one country may not be resolved for quite a significant period of time, probably 2 to 3 months, or unresolved forever. A country could complain about item X being unresolved or issue X being unresolved, could be paralysis of movement of goods, could be even simple things as simple as a traffic accident involving a cargo truck or something. And this may take a month, 2, 3, unresolved. Theft of cargo. You know, you have cases of theft of cargo across the region, and oftentimes it goes unresolved. So you have containers of cargo missing, you have minerals missing. You can imagine a container 2, 3 missing, and they are carrying, you know, very important minerals for Rwanda. So we need, I think, to speak to those responsible for dispute mechanism, resolution mechanism, to wake up to this. Number 2, we need to look at the roles of the East African Legislative Assembly and the East African Court of Justice. How many cases are actually resolved in real time so that trade is facilitated? Again, as I said earlier, some of these things happen, and the East African Parliament will have several sessions, speak to their different countries, but how long is it going to be between the discussions in that parliament and implementation on the ground? Clearly, you can see, oftentimes you see there's a disconnect. When Parliament has discussed item XYZ and made legislation on a specific item, harmonizing it with the national legislation becomes real problematic. So there is need for, I think, reviewing the operations and the strength and operations activities of the East African Legislative Assembly and the East African Court of Justice. If a matter is resolved in the Court of Justice, can it then be implemented immediately? Can the ruling get into effect immediately? Then I think overall, there's need currently to review the protocol establishing the East African community. Clearly, ever since the community was established, the protocol has never been reviewed. So by any standards, it's gone obsolete. We have gone as far as requesting the different chairpersons who have chaired the East African community, the heads of state who chair it at different times, because as you know, it rotates. A few times we have requested that clearly, can we have a quick review of the protocol establishing the East African community? Because you see, who manages the East African community? Usually there is a Secretary General whose role is to coordinate the activities and is the CEO basically at that level. Now, when you have a weak or a non-performing CEO or Secretary General, it simply means you're going to have a good 5 years of no performance from this office, and yet it is supposed to coordinate the activities of the region. So there's urgent need. We have voiced this to all the chairpersons of the East African community to review the protocol establishing the East African community. If there is non-compliance, for example, of one country against the other on items, specific items, be it logistical, be it legal, be it commercial, what do we do? What does the framework provide for? If there's no decision, as you might know, that currently, if no consensus, the idea of consensus, once one country has rejected a specific aspect that is meant to benefit others, it means no decision is taken until a consensus is going to be reached. So there are several aspects of the protocol establishing the community that need to be reviewed and updated to suit real-time current challenges and opportunities. Then there's harmony. My colleagues, I think, talked about it earlier. Harmony with the common external tariff. This is a real big challenge, because how do we now ensure our competitiveness? How do we even promote the trade in Rwanda in particular, when different other countries are going to let in goods from wherever they come from at prices that we cannot compete with? So it becomes very unfavorable for Rwanda as a country or as economy. Somebody earlier said it is not landlocked, but it is land linked. But you see, once it is not harmonized, it simply speaks to both finished and unfinished goods. If people are going to let raw materials into their countries at much lower tariffs, then how are you going to compete with these countries? So there is need to really push this. We have been speaking about harmonizing common external tariff throughout I remember for the last 6 years, as East African Business Council, we have spoken at all forums, harmonization of CET, and each time you get requests for stay of application of the CET harmonization process, and it only retards progress. So we need to speak in larger volume, possibly, but we need to work jointly with the World Bank. Interestingly, myself and the World Bank representative in Kigali, and I think somebody, Mona, we have never met and we have never spoken. So what language are we speaking? If we're only meeting on a Zoom today, when are we going to be meeting to speak the same language, so that when we are in Arusha, when we are speaking, because East African Business Council has leverage to directly engage the Legislative Assembly of the region. We can, we meet heads of state as and when we think it is important. So why don't we usually meet and harmonize positions? Because you see, this is also another challenge, that there is a position of the World Bank, there's a position of the East African Business Council, there's a position of the Ministry of Trade, but Kajangwe, fortunately, we occasionally talk. So we need also to harmonize our in-house business and speak the same language and push a similar agenda. I think when we push as a bigger group, we make a lot of impact. Then there's an issue that we have talked about, my colleague spoke about it earlier, open skies policy. East African Business Council 4 years ago presented a thorough paper on the cost-benefit and with the cost-benefit analysis of opening up the skies of the region. But it has been problematic in every summit. Those of you who have followed the summits in 2018, in 2017, in 2016, in 2015. High on the agenda was the idea, was the point of opening up airspace, liberalizing airspace in the region. It has remained unresolved to the present day. So I therefore think we need to push this beyond simply the East African Business Council, but I think clearly, because I've been present in these summits when Rwanda made its case clear. Let us open the skies for the benefit of everybody, not just to people, because it will ease movement of people, it will ease movement of air cargo, and making it affordable and making transportation across the region and beyond more affordable. I remember discussions around opening air skies when we translated to ACFTA, and our only hope then became, can we possibly forget about liberalizing regional airspace and consider the opening up of the African airspace? Maybe one will solve the other.
Maybe I can just come in. I think you've given us a very nice segue there to the African Continental Free Trade Area issues. But thank you for raising a number of really important issues around the institutional setup in the EAC, and perhaps we can get some feedback from other panelists on that. But also, I think the importance of cross-border coordination in a crisis. We've seen in places where countries have actually worked together, we saw a much more effective response to the pandemic And I'm sure that's going to be true for future crises. And as Mona mentioned, there are unfortunately more crises that are coming our way in the global economy, whether they're from health or from climate. So I think having in place mechanisms for coordination with countries will be very important. But if we can move on, I think there's another really important issue that the report raises, which is the African Continental Free Trade Area, which is the new agreement on the block, if you like, and perhaps an opportunity to address some of the challenges that you mentioned there around the sort of predictability of trade policy for the private sector. So maybe we can go back to Mona initially, and you know, the report there shows the potential of the African Continental Free Trade Area to create new opportunities, new trade opportunities, and reduce poverty in Rwanda. And what should Rwanda do to seize the opportunities that are presented in the report? Mona, over to you.
Thank you very much, Paul. First, I would also like to acknowledge the leadership role that Rwanda played in making the Africa Continental Free Trade Area happen. I think this was a visionary endeavor, and it was Rwanda certainly played a very important role in making it happen. So the ACFTA offers great opportunities for leveraging trade for post-COVID recovery. The creation of the ACFTA represents a unique opportunity to boost growth, cut poverty, and reduce Africa's dependence on the boost and boom commodity cycle, on the boom and bust commodity cycle. According to the World Bank's latest estimates, if the ACFTA can lead to deeper integration in the region, it could potentially increase real income by 9% and lift 50 million people out of extreme poverty by 2035. For Rwanda in particular, according to our projections, the ACFTA has the potential to increase real income by 4.3% and lift 430,000 people out of moderate poverty by 2035. Rwanda should deepen trade integration with major trading partners in sub-Saharan Africa. Rwanda is already part of the COMESA, the EAC. It was among the first signatories of the ACFTA. It's also a member of the ECCAS. To consolidate regional markets, it will be necessary for Rwanda to actualize the implementation of various trade agreements, most prominent among them being the EAC. With a combined population of 170 million, 15 times that of Rwanda, and the combined GDP in 2016 of 163 billion, 18 times larger than Rwanda's GDP, the EAC represents untapped benefits from deeper integration. However, existing trade blockades between countries in the EAC have diverted Rwandan trade away from countries like Uganda to Tanzania and from Burundi to the DRC. This has been accompanied by increases in informal cross-border trade, which is less than optimum. Despite the relatively minor effects of real income due to blockades, around 0.4% decline in real income, the risk of escalation might amplify these effects. I think Calvin already provided a lot of details on this issue, but I just wanted to highlight it. And of course, the politics sometimes comes into the picture. However, on the economic front, these blockades are and could have even more impact in the future. Reducing trade costs would also be critical and can be a costless stimulus. As in many other countries, the high prevalence of non-tariff barriers and poor trade facilitation procedures impede the growth of intra-regional trade. The World Bank analysis has shown that through the ACFTA, extreme poverty would decline across the continent, with the biggest improvements in countries with high poverty rates. And the biggest gains would come first from addressing non-tariff barriers and improving trade facilitation. Trade liberalization can be important, but by itself, it would boost the continent's income by just 0.2%. Adding trade facilitation to the mix, including measures to reduce red tape, simplify customs procedures, and make it easier for African businesses to integrate into global supply chains, would boost Rwanda's income by 3% in 2035 relative to the baseline. I want to reiterate a few points that Antoine mentioned, which I think are extremely important and would also help Rwanda not only grow, but also improve its opportunities to trade within the Africa Free Trade Agreement area. Trade in services, digital services such as ICT, finance, and maybe even health services that may be needed as a result of COVID, and other diversification strategies that move Rwanda up the value chain will be opportunities within ACFTA for Rwanda. And these sectors would allow Rwanda to raise its standards in key and more developed markets within the ACFTA, like Kenya, South Africa, and Nigeria. And this will enable Rwanda to be more ready in the future to export to more sophisticated markets where it already has preferential access, such as the EU, but is not able to reach such markets in a big way at the moment because of the standards issue. So the ACFTA can be a first step, and then as a second step, even reach beyond that in those particular sectors that Antoine mentioned. We did undertake a study on the private sector a couple of years ago, the country private sector diagnostics. This CPSD highlighted some constraints to the private sector that the private sector is facing related to access to skills, high transportation costs, finance, and ICT as inhibiting the competitiveness of the private sector. And as the previous speaker just mentioned, you really need the private sector to be competitive, to be able to trade and take advantage of free trade agreements such as the ACFTA and beyond. Let me end by saying that Rwanda's economy is projected to continue to recover, and clearly a private sector-led, export-led growth would be part of this recovery, and taking advantage of the ACFTA will also be part of this recovery. So thank you very much. Over to you.
Thank you, Mona. I think you raised the issue of ICT there, and then we've had a question in the chat, which hopefully we'll have time for later that I can pose to the panelists. But there are a couple of issues in the report that I'd like to discuss before we get there. But I point out to the panelists we are running short of time, so they can keep their answers brief. And one striking statistic in the report is that trade with the DRC and ECAS now exceeds trade with all the other EAC countries. I found that quite striking. And the question then to Antoine is, we're seeing increasing trade with the DRC, but what more could be done? Is there more that could be done to realize those trade opportunities with the DRC? Antoine.
Sure. Thank you, Paul. Absolutely. I think there's a lot that needs to be done. Maybe just to quickly share, in the first 11 months of 2021, our total exports in value terms totaled almost about $500 million US dollars. So that's close to a third of our total exports to our total exports globally. So the DRC presents a huge opportunity for Rwanda's export moving forward. Of course, the terms of trade that the report highlights and that have been spoken about earlier in terms of trade facilitation, the cost of trading across borders with DRC will be addressed, I think, substantially and significantly once DRC enters into the East African community. Of course, there are arrangements of being part of the EAC ensures that they can begin to eliminate tariffs on other EAC member states. They would reduce NTBs, non-tariff barriers. And as you're aware, EAC has probably one of the strongest EAC monitoring mechanism that has helped to facilitate intra-regional trade. I think the report touches on trade facilitation being a major benefit of the EAC for Rwanda, despite maybe lower terms and lower volume of trade within the region, but it certainly helps to reduce the time and the cost of trading. So concluding and ensuring that the DRC can enter into the East African community is going to be paramount to continued trade and engagement with that market. Similarly, with ECAS, we're in the process, as the Honorable Minister mentioned earlier, of operationalizing the free trade, preferential trade agreement with that market. So this will, of course, also ensure that we can have improved terms of trade as we eliminate tariffs, reduce NTBs, increase trade facilitation, so really in terms of simplifying customs procedures, and importantly, ensuring transparency in documentation, in procedures, processes for export and import, and also in standards harmonization. We mentioned in the EAC, we have 1,500 standards that have been agreed upon, and those really help to ensure that there is a level playing field. But I note very well the comments of Mr. Carrera, really in terms of ensuring that we can operationalize an enforcement mechanism to level the playing field. This is going to be critical moving forward, not just for the EAC, but for the AFCFTA as well. If we really want to ensure that we can have a successful if we can ensure that we can have a successful AFCFTA implementation, it ensures that all member states are committing to implement the articles and the treaties that we've signed. I think another factor will be to ensure that we can formalize bilateral cooperation agreements with DRC, with ECAS, and these are agreements and cooperation treaties that we've started to put in place, whether those are mutual recognition agreements for services sectors, a simplified trade regime, to ensure that we can facilitate informal cross-border trade, but also small-scale trade. Operationalizing joint border committees to discuss and deliberate on some of these issues, technical cooperation committees with countries that we don't share borders with, ensuring that we can also have standards and customs cooperation agreements between governments, standards and regulatory bodies, but also the private sector. Rwandair, air transport, and I think, again, Mr. Carrera mentioned this, is going to be critical. Being land-linked ensures that we can have a multimodal approach to logistics and to trade. So where we can take advantage of our national airline to ensure that there is passenger and cargo transportation, we must also ensure that there is a single African air transport market. And this is, of course, a framework that's being negotiated under the AFCFTA, but needs to be accelerated and implemented given its huge potential. We also must expand distribution and logistics facilities. The report, again, stresses this point very convincingly, and the Honorable Minister touched on this. There's considerable investments being put in place right now to ensure we can start to target the DRC market, that we can start to meet the demand that is there today, that will continue to expand as the DRC enters into the East African community. So infrastructure like warehouses, cold rooms, fulfillment center, and improving trucking services as well, which the report touches on. There's also needs to develop regional value chains with countries, whether that's the DRC or in the ECAS as well, in textile, in manufacturing, in agriculture, agro-processing. There's a lot of experience in development and industrial development that Rwanda has managed to develop over the last decade that can be built on, not only in the Rwandan market, but of course across the region. Trade policy tools that incentivize exports. The CET review, again, as Mr. Carrera mentioned, has been a long-standing issue. It's been negotiated for close to 6 years now. Member states are only now reaching a somewhat of a conclusion that I'm sure will not be perfect, but will get us to a point where the export bias that we've seen and that the report touches on can be minimized. A lot of incentives or intermediate products that did attract a duty have been shifted to their appropriate place, either as raw materials or out of finished goods. And so the terms of trade, the tariffs that they've been attracting us now will continue to reduce. But there's, I think, policy space for additional policy tools, whether those are duty drawback schemes or continuing to facilitate more trade financing that can help exporters to really go out and ensure that they become more competitive. Finally, I think there's potential to also ensure that Rwanda can be a hub and a gateway for investment to the region. Of course, with the establishment of the Kigali International Financial Center and the incentives that it provides, this will help to provide a multiplier effect really for all the other sectors that we've mentioned above. So there's a comprehensive approach that we must take to grow the market, to grow the potential of the DRC and ECAS region, not to mention the AFCFTA and the role that it has to play and the leadership role that Rwanda should and must continue to play down the line. So in brief, just to touch on those, but happy to take some questions later. Thank you.
Great, thank you very much. And you raised logistics there, which is another key element of the report. And a quick question to Amina is what is the government's strategy to exploit the opportunities to realize that potential of Rwanda as the logistics hub? Thanks.
So that normally should be a question to Minicom colleagues. Because they have a strategy in place to establish Rwanda as a logistic hub. So their value proposition, is speaking to on agro-logistic centers that will offer post-harvest services for value addition, consolidation of production, packaging before those goods can be exported. We are also looking at establishing foreign-based multi-services center, targeting our port of entry, which is Dar es Salaam, Mombasa, but also we have also Djibouti in the strategy, bonded warehouse, implementation of economic zones, industrial parks at borders that can also cater for demand of small food shipment, for example. We have already the investment that is in place, the Kigali logistic platforms, that is really helping on cross-docking for higher value product, off-dock container depot, also at Dar, Mombasa, and Djibouti. So we have a range of facilities that we like to establish, to invest in, to be able to become that hub that can facilitate not only trade within Rwanda, but also helping even the region in trading under the ACFTA framework, which now is a big strategy for us. So we like really to position and also contribute to the implementation of that continental free trade agreement. Then, of course, with COVID-19, we have to reprioritize, the implementation of that strategy with regard to the fiscal consolidation that we are in. So this is a discussion that will be having sector by sector, but also looking at what are we trying to achieve overall as a country, because we are seeing those facilities as enablers, and they will be enabling different sectors in what they are trying to achieve. So depending on the priorities of the country, then of course the strategy will be implemented accordingly. Thank you.
Great, thank you very much. And I'm now getting into borrowed time, so I'm going to get into trouble. But I think if we can go on for just a few more minutes, we've had a couple of questions from the audience, and maybe one to Dennis initially is a question that regarding the digital market and how Rwanda can spearhead efforts to create a digital market within the EAC. Because that would offer enormous opportunities for Rwandan startups. Dennis, your views on that would be great.
Thank you very much. I think clearly Rwanda has made significant steps and is ahead of all the countries in the region in terms of ICT development. Because there's basically fiber developed, the penetration is quite high throughout the country, way beyond any other East African member state. So we need to take advantage of this and make sure that we digitize operations across the region, tapping into our ICT development. This is key, and we stand a good advantage. And basically, look at the current system of the electronic tracking system of our cargo, right from the border, each border from Dar es Salaam and Mombasa up to Kigali. It facilitates business, as you can imagine. So going forward, I think we should clearly take advantage of this and have it spread across the specific smaller borders across the region, so that we're able to link and follow up traffic of our goods wherever it is. So that's critical, and we need to build on it. We're already ahead of everybody. Specifically now, you mentioned about the interesting opportunities my colleagues mentioned in DRC, coming up in DRC. Now, we all know that DRC has a low penetration of ICT, apart from the mobile and telephone network. There's very limited ICT development in that area. We need, I think, to come up with initiatives to have intermediate and ultimately graduate to long-term ICT development, so that we're able to monitor goods across those borders, because DRC is quite an interesting market that as everybody said, we should be seeing volumes of cargo heading up there. Then the other thing I think would be developing also ICT specific points along Lake Kivu, as well as we develop, while we develop the logistics centers in that place. Our warehousing facilities across the region, across the Lake Kivu, will be very, very particular, and in Bukavu in particular, to make sure goods are easily monitored, and warehousing is connected to the transportation arrangement, so that DRC becomes really profitable.
Great, thank you very much. And then one final question, and I think perhaps to Amina first, from the chat, is that which points to the recent variability in the exchange rate for the Rwandan franc against the US dollar, and the challenges that poses to producers in Rwanda, given the high imported content of intermediate materials, and what can be done in a sense to address that challenge and limit the impact on Rwandan producers. Thanks.
Come again, please.
So the question was really about the variability of the exchange rate and how that might be impacting given on local industry, given the high imported content of intermediate materials.
Yes, yeah. So, but when you look at the exchange rate movement since the onset of the pandemic, you can see that it has been very limited. So being able to contain, but of course it was also due to lower pressure because of because of containment measures and lockdowns. But from July last 2020, so the economy is more open, and then we've seen actually some pressure on the exchange rate. But it's a pressure that is not that high, that we've been able also to limit on the side of the inflation by trying to contain pressure in terms of, for example, the international oil prices that is increasing. We have some measure in terms of subsidizing for example, the pump price that is helping contain the pressure and the pass-through to exchange rate. We have also support to a sector, public transport sector, which is actually support to the general public, which has also helped contain the inflation pressure. So as the demand is going up in line with the recovery, but of course, exchange rate will start to become, and also started already to become volatile. But there are monetary policies in place to try to support. But of course, we are not going to control that, but to work around it and make sure that we don't have a rate that is becoming harmful for the economy. But on the other side is also a good thing for our export. Thank you.
Great, thanks. You highlight the challenge of inflation pressures, which are around the world, not just for Rwanda. But Dave, thanks very much. We've gone over time, but that reflects that this is such an interesting discussion. So I want to thank Amina, Antoine, Dennis, and Mona for such a great discussion, which really has highlighted, I think, to me, that the real progress that's been made and the opportunities that are there to be taken. And personally, I was at the border between Rwanda and DRC 20 years ago. I've seen the huge progress since then, and the incredible benefits that that's had for both countries, but particularly the border communities. And so I think trade has played a key role in that, and continuing to leverage trade will continue to drive down poverty reduction, increase value added, and increase the quality of jobs. And I think we've heard how those are top priorities for the government and the private sector. So with that, I'm going to pass it back to, I think, Rogers or Roland, and thank very much again the panel. Thank you.
Thank you so much, Paul, for what is an interesting panel. We find that this happens every time. We used to have these Rwanda economic updates for an hour and a half. We extended it to 2 hours because the conversation is generally so interesting, and we're still running over time. And I think 2 hours is really the absolute limit that we can keep people's attention. And that's just because of the high quality of the panelists. Whenever it is that we have ministers making a keynote, as Minister Beata did today, it's very insightful, the policies that the government is, in fact, deploying to address some of these issues. And so I really would like to thank the panelists again, and you, Paul, for marshalling this discussion. I'd like to also thank all of the participants. We still have quite a number, both on WebEx and on YouTube, who have stayed with us through this time. And we're very appreciative. The link to the report was shared. It's also available on Twitter. I've retweeted a number of times now the link. Anybody who would want to access the report, it not only has this very dense piece on trade, but it also has the outlook, the economic outlook section. It is clear that growing regional trade is what is going to be essential for a sustainable, resilient, and inclusive recovery after the COVID crisis, and what is going to help Rwanda meet its ambition of being a middle-income country before 2035. And for us, we know, and we've said this in the report, and I believe this has been echoed by our panelists, that this is going to take investment. It's going to take policy change. It's going to take, coordination, discussion, consultation with the private sector to find out exactly what is the right mix of policies, investment that will get Rwanda to where it needs to be. What I'd like to say is that the World Bank is going to be a key partner in that effort, in the analytical work that we will continue to do and develop, and hopefully you'll join us again in March when we have the extended version of this report, where hopefully we will have DG Antoine again back with us to talk about some of these issues, but also in the financing, to be part of that, investment that might be needed in order to get the particular building blocks in place for us to move this forward. We see very strong commitment, of course, on the part of the government, not only commitment, but leadership. And we would very much like to stand behind Rwanda so that it can continue to play that role, to take full advantage, for example, of the latest free trade agreement, the Africa Continental Free Trade Agreement, which we see as having great potential for growing this regional trade. We thank you for your interest, your participation, and please keep joining us when we have these opportunities to talk about these critical policy issues. Thank you very much and have a good evening.
Thank you.
Thank you very much, too.
Thank you very much.
Thank you very much. Very much appreciate it. Thanks a lot.